Welcome to the Deep Dive. You're tuning in because you're looking at freehold properties in Toronto's Central Core, and your agent, Brad Cox, suggested this deep dive could be really useful.
Yeah, absolutely, to help you get a handle on the bigger picture.
Exactly. So that's our mission today. We've got some recent Toronto market reports, plus insights from a pretty candid podcast discussion about, well, what some are calling the 416 condo crash.
Right, and we're going to try and pull out the key stuff, the most important insights from all of that.
To give you a clearer view of the market dynamics, especially how things might affect your plans for buying freehold property.
Precisely. The reports give us, data predictions for 2025. The podcast discussion offers more of a narrative, a historical view on how the condo market got here, sometimes quite direct.
It's good to have both, right? The data and the story behind it.
Definitely. It helps build a fuller picture, one that's actually relevant to what you're doing in the freehold market.
Okay, so even though the focus for you, our listener, is freehold, Central Core, you're saying we need to understand the condo market. Why is that so crucial?
Well, it's all connected, isn't it? The whole Toronto real estate market, think of it like an ecosystem.
Yeah.
What happens in one part, like condos, price changes, inventory levels, buyer mood, yet it can send ripples out.
Ripples that affect freehold, too.
Absolutely. The condo market often acts as sort of an early warning signal for wider shifts.
Yeah.
So keeping an eye on it, it's just smart context for your freehold decisions.
Right. Makes sense. So let's maybe start with that historical context from the podcast. How did the condo market get to this point? It sounds like there were some major shifts.
Yeah, a key point they made was how the idea of a Toronto condo changed. Before, say, 2011, 2012, they were mostly homes, owner-occupied, often that first step onto the property ladder. People bought them to live in.
So traditional path, yeah. Getting your foot in the door. When did that change?
The podcast argues it started shifting around then, 2011-ish. Condos became, investment vehicles.
Ah, okay. Less about a home, more about making money.
Exactly. Part of it was the broader Canadian economy wasn't super vibrant, so real estate looked like a good place to create wealth.
And interest rates were low back then too, right?
That definitely fueled it, made it easier, cheaper to borrow for these investments.
So you had this switch. Individuals buying homes became more about investors buying units.
Spot on. And then you had the rise of, flip coaches. Remember those?
Vaguely, yeah.
Promoting this idea of buying pre-construction, maybe assigning the contract before closing, trying to make a quick buck. Very different from long-term investing.
Yeah, short-term speculation. And then Airbnb entered the picture. Did that play a role?
Oh, big time. According to the podcast, Airbnb really inflated the perceived profitability.
How so?
Well, the potential for higher income from short-term rentals compared to just having a long-term tenant.
Yeah.
It made the numbers look way better.
Justifying higher purchase prices for investors.
Exactly.
Yeah.
It supported this idea that you could run essentially a little hotel business from your condo unit, generate much more income, theoretically.
Okay. And foreign investment, the podcast mentioned that too.
Yeah, particularly between maybe 2013 and 2016. A significant influx of capital, especially from China, drove demand even higher. Developers obviously responded, built more and more.
So low rates, investment focus, Airbnb potential, foreign capital, a perfect storm almost.
And here's another interesting piece the podcast brought up, the role of municipalities, especially Toronto.
What about them?
They became pretty reliant on development charges for revenue. And in that booming market, they just kept increasing those charges.
And developers just passed those costs on.
Well, yeah, because demand seemed endless, right? So in a way, government policy also helped inflate the costs within that bubble market.
So it wasn't really about the fundamental value anymore. Like, what could you actually rent it for?
That's the argument. It became less about rental income fundamentals and more about just expecting prices to keep climbing. The podcast called it a tulip bubble.
Driven purely by speculation.
Pretty much.
Yeah.
Appreciation was the game. Cash flow kind of took a back seat. And the podcast suggests, that was never going to last. We're seeing the fallout now.
Which brings us to the present. The condo market crisis the podcast talked about. What are the signs?
Well, first off, that assignment market, the one that fueled the flipping, it's basically vanished.
Okay.
Then you've got new regulations that have really clamped down on Airbnb operations in many buildings.
Right, that changed things.
Foreign investment has also pulled back quite a bit. So investors who bought, planning to assign or rent short-term, they're stuck.
And the numbers don't work with long-term rent.
Often, no.
Yeah.
The rental income just doesn't cover the mortgage and costs,
Wow.
especially at those inflated purchase prices they agreed to years ago.
And this is causing issues with appraisals when it's time to close.
Exactly. That's a huge issue right now. Appraisals are coming in way lower than the contract price. Buyers suddenly need to find tens, sometimes hundreds of thousands of extra dollars.
Which many can't do.
Right. Which leads directly to a big spike in fail-to-close situations. Buyers walking away, losing their deposits. The podcast estimated it could be like 30–35%, maybe even higher in some projects.
Wow, that's a massive failure rate. And that can actually stop the condo court from forming.
Yeah, it can delay it significantly. You need a certain threshold of units to legally close and transfer ownership before the condo corporation can be officially registered and take over management. High failure rates mess that whole process up.
Okay, so that paints a pretty concerning picture for the condo segment. Now let's connect this back. For someone listening interested in freehold in the central core, how does this condo situation actually impact them?
Right, this is the key connection. All those unsold or unclosed condo units, many are ending up on the rental market,
Increasing rental supply.
massively increasing it. And basic economics tells you when supply goes up that much.
Prices tend to go down, or at least soften.
Exactly. It puts downward pressure on rents, not just for condos, but potentially across the board. It affects the whole rental market dynamic.
So even if I buy a freehold house to rent out, the glut of condo rentals could mean I get less rent than I might have expected a year ago.
That's a definite possibility. It's a potential drag on rental income for all types of rental properties, including freehold. That's a major headline for freehold investors right now.
Okay, that's a clear impact. What else? Any broader economic risks mentioned?
Yeah, the podcast touched on concerns about household debt. A lot of these condo investments were likely financed using things like ATLOs.
Home equity lines of credit, borrowing against their existing homes.
Precisely. So if those condo investments go underwater or if people start defaulting, it puts stress back on their primary residences.
And that ties into worries about unemployment, too.
Potentially, yes. The podcast mentioned concerns that things like international trade issues may be affecting sectors like steel or auto in Ontario, if that leads to job losses.
It makes it harder for people to carry that debt.
Exactly. It could exacerbate financial stress, potentially leading to more defaults across different property types, not just condos. It's that risk of contagion.
Okay, so it's not isolated. Now, what about the future? Let's look at those market reports. What are the experts predicting for the condo market, specifically in, say, 2025? Sounds like mixed signals.
Very mixed, yeah. You've got a range of forecasts. Some experts see potential for gradual price growth, maybe picking up in the second half of 2025.
What's driving that optimism?
Mostly the expectation of more interest rate cuts from the Bank of Canada. Lower rates could bring some buyers back into the market.
But not everyone agrees.
Definitely not. Others are predicting a price dip for condos in 2025, maybe like 1% down year over year by the end of the year.
And that's because of...
The sheer volume of inventory, that oversupply issue we talked about, just a lot of units needing to be absorbed.
And is there a middle ground prediction?
Yeah, some are calling for prices to be pretty flat, especially in the first half of 2025, maybe a slow, slight increase later in the year. That view often factors in potential government policies or incentives, especially if there's an election coming up, maybe trying to stabilize things.
Okay. And specifically for condo investors in 2025, what's the outlook there according to the reports?
Generally, still challenging. The reports highlight that high borrowing costs, even if rates come down a bit, combined with all that supply, it's going to be tough for investors to make positive cash flow.
So profitability is still a concern.
Big one. There's even talk of potential negative equity for some, where the condo's value drops below what they owe on the mortgage.
So the reports seem to echo the podcast's concerns about the difficulties for investors.
Oh.
Okay, let's broaden out again. What key factors do the reports say are influencing the condo market overall?
They pretty consistently point to a handful of interconnected things. Number one, interest rates. Bank of Canada policy is huge, affects borrowing costs, affordability. Then economic growth. Jobs, population growth. That fuels overall demand.
Makes sense.
Government policies are another big one. Mortgage rules, taxes, incentives, first-time buyer programs. They can really move the needle.
Okay.
Consumer confidence, just how people are feeling about the economy and their finances, that impacts decisions.
Sure.
Inventory levels, obviously, especially the record number of condo completions we're seeing now. That's putting huge pressure on prices.
We keep coming back to that supply issue.
It's central right now. And finally, investor activity itself, driven by potential returns versus costs. All these factors interact.
It's definitely complex. Okay, let's tie it all together again. For you, our listener, focused on freehold in the central core, how do these condo dynamics really relate to your plans? Let's be specific.
Okay, number one, buyer sentiment. That huge condo inventory can make all buyers in Toronto a bit more cautious.
Even freehold buyers.
Yeah. They might be less willing to jump into bidding wars or pay top dollar for any property type when they see so much supply sitting in the condo segment. It creates a general feeling of a cooler market.
Okay, so potential impact on overall price negotiations or expectations. What else?
The rental rate pressure we discussed. If condo rents are softening or falling, that indirectly affects the investment appeal and perceived value of freehold rental properties too. Tenants have more options, potentially more negotiating power across the board.
Right, so it impacts the potential return on a freehold rental investment.
It could, yes. And then there's just the general economic uncertainty, partly driven by these condo market issues, but also wider factors. That uncertainty can dampen buyer demands and affect price stability, even for desirable freehold properties in the core.
So even though freehold is different ownership, often different buyers, it's not immune. It's part of the bigger Toronto ecosystem.
Exactly. It's all subject to these broader market forces.
Speaking of broader forces, that RBC thought leadership piece you shared mentioned something about trade wars. How does that fit in?
Yeah, that was interesting. It noted that concerns about potential U.S. tariffs have actually put a bit of a damper on housing market sentiment here, especially in southern Ontario, including the GTA.
Really? People are pausing because of tariff talk.
Apparently some buyers have, yeah. It adds another layer of economic uncertainty, especially for regions like ours that are sensitive to trade shifts.
And that's showing up in the market?
The RBC piece suggests the pullback is maybe more noticeable in places like the GTA, where affordability is already stretched thin. Concerns about jobs tied to trade, it makes people hesitate.
So we've seen some price softening in Ontario, partly because of this. Supply tilting towards buyers.
That seems to be part of the picture, yes.
Mm.
But the outlook there is still pretty uncertain, U.S. trade policy can be volatile. Things could change quickly.
Okay, wow. We've covered a lot of ground here. From the condo boom and bust story to current pressures, future predictions, influencing factors, and even trade impacts. Let's boil it down. What are the absolute key takeaways for someone navigating the central core freehold market right now?
Okay, key takeaways for you. 1, the condo market in Toronto is definitely facing headwinds, significant ones. Oversupply, the shift away from speculation, it's created real challenges.
Right.
2, this isn't happening in a vacuum. It has ripple effects.
Yeah.
For you in the freehold market, that means potentially more cautious buyer behavior overall, maybe more moderate price growth expectations than in the past few years.
Okay, manage expectations.
And 3, be very aware of the rental market dynamics. That flood of condo rentals is impacting rental rates, and that could affect the return on any freehold property you might plan to rent out.
So understanding the condo situation gives crucial context, even if you're buying freehold.
Absolutely. It's a valuable background for making informed decisions, understanding pricing, and navigating negotiations in the current Toronto landscape.
So what's the practical next step for our listener then?
Well, armed with these insights, the best next step is definitely to talk it through with your agent, Brad Cox.
Right.
He's on the ground, he knows the specific freehold nuances in the central core, and he can help you apply this broader market context to your specific situation and strategy.
Excellent advice. Okay, let's wrap up. We always like to leave our listeners with something to think about.
Yeah.
Given everything we've unpacked today, the condo troubles, the economic factors, the predictions, what new questions does this raise for you about the real long-term stability and future direction of Toronto's central core real estate, both condo and freehold, something to really mull over as you move forward? Thanks for joining us for this deep dive.